The United States dollar, often called the USD, is the most dominant currency in global trade. And for decades, it has acted as the primary medium of exchange for importing and exporting goods, settling international contracts, and holding national reserves. Today, most countries around the world trade using USD because it provides stability, liquidity, trust, and easier access to global markets. To understand this, we first need to explore why the dollar became so important and which nations ostensibly rely on it. After World War II, the Bretton Woods Agreement positioned the USD at the center of the financial world by backing it with gold. And even after the gold standard ended, trust in American economic power pushed the dollar to remain the world's dominant trade currency. Currently, the USD makes up the majority of international transactions, foreign exchange reserves, and global banking, meaning that countries, whether friendly, neutral, or sometimes politically distant from the United States, they'll often rely on dollars for efficiency. Among key players, the European Union continues to use a dollar in major international contracts, despite having its own currency, the euro, because many global commodity sectors are dollar-priced. China, the world's second largest economy, uses USD heavily for imports and exports, especially in oil, shipping, manufacturing, and international logistics, although it is gradually trying to increase use of its own currency, Japan, one of the largest global exporters and importers, also regularly trades in USD due to its integration with global supply chains. Saudi Arabia and most Gulf nations, including United Arab, Kuwait, Qatar, Bahrain, and Oman, trade almost all oil exports in US dollars, continuing the Petrodollar system that strengthened USD dominance for decades. Major Asian economies such as South Korea, Singapore, India, Indonesia, and Malaysia also frequently rely on USD for their international trade because of well-established banking systems and dollar-denominated contracts that reduce risk. In South Asia, Pakistan, Bangladesh, Sri Lanka, and Nepal depend heavily on USD for both imports and exports, especially for energy, industrial machinery, and in Africa, while several nations maintain local currency for domestic markets. Most international trade is conducted in especially for commodities such as oil, gold, copper, and diamonds. Countries like Nigeria, Egypt, South Africa, Kenya, Tanzania, Ghana, Ethiopia, and Algeria use USD for large-scale trade because their trade partners and banking systems are linked to global dollar-based markets in Latin American nations, including Mexico, Brazil, Argentina, Chile, Peru, and Colombia use USD extensively for trade because of economic volatility in local currencies and strong economic ties with the United States. Even in countries where local currencies are unstable or experience high inflation, the USD becomes a trusted value store. Examples include Venezuela, Argentina, Zimbabwe, and Sudan, where both trade and daily transactions rely heavily on the dollar. In Eastern Europe and Central Asia, countries like Turkey, Georgia, Azerbaijan, Kazakhstan, Uzbekistan, and Ukraine use USD widely in trade due to stronger stability and wider acceptability compared to their local currencies. Russia historically traded oil and gas in USD, But after sanctions began shifting toward other currencies, yet many global buyers still referenced USD pricing. Many smaller economies in the Caribbean and Pacific regions, such as Jamaica, Dominican Republic, Bahamas, Fiji, and Samoa, rely on USD for trade, tourism, and foreign exchange. Globally, energy, oil, gold, and industrial commodities are largely priced in USD, meaning that even when countries don't officially settle payments in dollars, contracts and reference values are still based on USD for clarity and stability. In addition, global organizations like the IMF and World Bank lend or record reserves primarily in US, reinforcing its central role in trade financing and international banking. Even multinational shipping companies, aviation, and global insurance industries use USD as the standard reference currency. Because of this, even if two non-US countries trade with each other, for example, India selling goods to Brazil, the transaction may still be priced in US dollars since both countries trust USD markets. The reason for this dominance lies in four major factors. First, the US economy is large and stable. Second, the USD is backed by deep financial markets where foreign countries can store their wealth. Third, global confidence in American institutions remains strong. And fourth, historical reliance creates a network effect because everyone uses it. Everyone continues using it. Even developing countries adopt USD-based systems for smoother and reliable cross-border transactions. However, in recent years, some countries have begun shifting toward alternative currencies due to geopolitical tensions. For example, China and Russia have tried promoting the yuan and ruble for trade, while India has begun negotiating limited trade in Indian rupees with certain countries. Despite such experiments, the USD still accounts for most global trade, especially for oil, raw materials, electronics, transportation, and global banking. Even nations with their own strong currencies like the UK, Canada, Australia, and Switzerland use USD heavily for international settlements. Many countries hold USD reserves through central banks to stabilize their economies, ensuring they can manage currency fluctuations and pay for imports more easily. Because USD reserves allow governments to buy goods, fund development, and maintain financial confidence, it becomes a global safety asset. Among the top countries that hold and trade heavily in USD are China, Japan, Saudi Arabia, South Korea, India, Brazil, Mexico, Canada, Singapore, Australia, Germany, France, Italy, Spain, Netherlands, and Switzerland. In the Middle East, USD remains king due to oil being traded almost entirely in dollars, a system established in the 1970s. In Africa and South Asia, USD is vital because local currencies often lack international trust and stability. The USD is also used widely for remittance. Today, more than 70% of global trade is estimated to be conducted in USD, either directly or indirectly. And central banks worldwide hold nearly 60% of their reserves in US dollars. Although countries like China are working to internationalize the yuan, the process is slow because the USD remains more liquid, more widely accepted, and more stable. Businesses, shipping companies, freight operators, and financial institutions prefer the dollar because it reduces currency risk, avoids volatility of smaller currencies, and simplifies cross-border trading. In summary, a large majority of the world, from Asia and Europe to Africa and the Middle East, relies on USD to trade because it is trusted, stable, and deeply embedded in the global economic system. And while global powers discuss de-dollarization, the dollar remains unmatched, and most countries continue to trade in USD today, making it the backbone of the modern economic world.